Justin Tibbetts here, financial advisor with Jazz Wealth. How you doing today? Hope you're doing well. We are financial advisors here at Jazz Wealth. Hope you check us out, jazzwealth.com. How many more times can I say Jazz Wealth? Let's get into what we're talking about here today. Oh, before we start, let's do a fun thing. Okay, in the comment section, and I'll tell you at the end of the video, just for fun. I just came up, I thought, this will be a fun game. Let's do it. What is, in the S&P, what would you say is the worst performer, annualized, losses of 12.1% annualized, like each year on average? Which stock is that in the S&P? Anyways, have fun with that. Hey, August turned out to be a positive month. August is known as one of those months where you can have these news events that create volatility as we come out of the summer, the last part of the unofficial summer. We had Jackson Hole. We got Trump going after Cook and trying to really kind of take control over the Fed there. We had earnings, inflation numbers came out higher, and it didn't happen, right? I pointed that out in our letter this week. If you're not familiar, if you're a client, each week we do a letter, and these are all the letters. They just show up in your portal, and we just kind of point out some different things there. Everybody chips in and shares a little something extra that we can't normally talk about here. So hopefully you'll check that out if you're one of our clients there. But we pointed out, hey, August turned out to be a little bit positive, right? Actually, you have the S&P is now up May, June, July, and August, 1% or more per month. There's only 6 other times that happened. And if you're curious, the S&P was positive for the remainder of the year, all 6 times. However, there were pullbacks, and we're starting to see that pullback right now. Let's take a look. Over here. We talked about this last week. We talked about the overbought, oversold stocks in the S&P. We track them as a percentage of which ones are overbought or oversold. And we know that when we get above that 35, 37% threshold there, that the market doesn't like that. The S&P as a whole tends to pull back. We also talked about September being a little bit weaker. And so really no shock what's happened today. Is it? No? Nobody's shocked, right? The market going into September tends to be a little bit weaker. We're actually going to cover some more detail on that here in a second. And we know that we were at an extreme in terms of the stocks that were overbought or oversold. So we're not really, we're not impressed, right? Now, here's the thing I want to share with you. September. There we go. This is the intra-month performance for September. Now, we're going to look at this a couple different ways, but the first thing I want you to notice is the green line is the last 10 years. Really simple to get that data, not a problem. The blue line is basically, the goal is for us to go over a 30-year window, or 40-year window if we can. So that's the blue line. Now, do you notice anything interesting about this? Well, yeah, of course, right? I put the lines on there. The beginning of the month, although it tends to be slightly negative, really doesn't do a whole lot. There's still some of that early volatility coming into the market. If there's going to be a actual drawdown through the month of September, it tends to happen after the halfway point. There's actually a couple months where this is very, very common in the month-to-month performance of the S&P. So we know that about halfway through, and as we make our way down through the end of the month, okay, fine. Historically, last 10 years and going back further, that's fine. What we did is we expanded this and said, well, remember I talked about this last week. What happens if August is positive or negative or nothing, right? Let's see what happens. So we know August was up over 2%. There's 13 other times that happened. That's the dark green line. Does that impact September's performance? It doesn't, right? We still see that same performance, although the weakness starts sooner. Remember over here, the weakness did technically start, as we got into the month, but typically it's pretty much sideways. Nothing real exciting. But as we go into an August that's positive by 2% or more, well, okay, the average performance is a minus 1.7%. If you're down in the month of August, September, those are those years where August holds itself together. Okay, cool. We didn't have that. We weren't down in August, greater than 2%. And if it's in the middle, like plus or minus 2%, right? Then same thing. It kind of, starts to fade away at the end of the month, but nothing too, crazy exciting there. So just wanted to share that with you. I know it's something different. Let's keep doing that. Let's do more different stuff. Today is down. Have you noticed a pattern this year on down days? When there's a down day, did you know that the next day tends to be positive? And I'll just talk about it. Let's just do it, right? Average performance after a down day by year. This year so far is the second best performing day after a down day, right? So I'll show you what that looks like. This goes back, we're using the SPY, and if you don't know, the SPY originated in 1993. So we can get all the data all the way back to 93. Otherwise, we've got to use the index, but we're using an ETF, so you can go and play along yourself if you like. Well, up to Friday, we have the next day's average performance after a down day, any down day, is an average of 26 basis points, or basically 0.25% return the next day. That obviously wouldn't erase what happened or is happening today, but the next day tends to be positive. We've had more of those this year than every year besides one. And that was during COVID, right? So there's a lot of down days, a lot of trying to, V-shaped recoveries trying to happen there. So really, really, really cool to see that, all right, well, hey, down day, that's fine. But the market this year has been so resilient to try to recover after those down days. Well, all right, we're down 1% today. Get a small bounce tomorrow, see what happens. We're going to need more information from there, because maybe this is a topping pattern, right, for you techies out there, if you like looking at that stuff. And maybe it's not, right? Maybe this is the time we just fall apart. Don't know, but I wanted to point that data out to you just so you could take a look for yourself. The Dow's in the same camp, having a little pullback day today. Of course, the NASDAQ being the same, the Russell 2000, a little bit more interesting what they've got going on. If I were to like zoom out, I'm not going to do it. If I were to zoom out, you'd see, you tech traders, you'd see that cup and handle type formation there. But then the Russell is not back at new highs yet. Everything else hit new highs. And I thought, well, that's a little bit odd. Let's see how long it's been since it hit a new high. Well, this is actually the second longest period of days where it did not hit a new high. The Russell 2000 previously went 954 days before hitting a new high in 2011. In 2004, that's the record, 1,021 days before hitting a new high. After today, we're going to be at 956 days. That is officially the second longest streak without hitting a new high. Kind of fun. I don't know. Just changing it up. Speaking of changing it up, gold. We talked about this last week. It is the best asset class of the year. It has the best performance, although the last couple months hasn't done a whole lot. That all changed over the last couple days. We have an official breakout here for gold, and that is hitting new highs as well. Oil back up here to the 50-day moving average. Notice that's where it's stopped and stuck right at the moment, trying to recover itself. Chris is going to actually be doing a cool video talking about gas prices. Pretty phenomenal what's happened with gas prices out there relative to history, and hopefully optimistic about what's to come. We will see. Anyways, that's pretty much what's going on around the market today. The volatility index is up after being down over 25%. So we know, that's not shocking, right? September, more volatile. Doesn't mean it'll be down or up or whatever, just more volatile. So we'd probably expect a little bit more out of that. And then looking at bonds, interest rates slightly higher, prices slightly lower. Other than that, there's not much else going on there. So I'll go back to our first question of the day. Which stock in the S&P has had the worst annualized performance of 12.1% over the last 10 years? In other words, if you invested in this stock, you would have seen, you would have seen average losses of 12.1% a year. And I look forward to your guesses, but if you haven't guessed yet, I'm going to share it with you. It's Walgreens. Although not such a problem now, but it's Walgreens. Really, really interesting. Hey, fun fact. Which stock had the best average yearly performance over the last 10 years? This is an easy one. Come on. NVIDIA. Best performance. All right. I'm going to wrap it up there. I appreciate you guys hanging with me here today. A little bit of a short one, but kind of hopefully we're getting started of this, what I would expect to be a little bit of chop through the first part of the month. And then we can work ourselves into a nice little pullback going through the rest of the month, but we'll see. Otherwise, either way, we'll be here to talk about it. So enjoy the rest of your day. Remember, we are financial advisors ranked 36th best in the country by USA Today. Hope you'll check us out. If you're looking to work with a financial advisor and you want to know the person you're actually working with instead of some call number, that'd be us. Hey, here's one of our commercials. Let's see if you like this.
Hi, we're Jazz Wealth. Please say you'll be the support for the innocent doe that's suffering right now. Ugh, stinky. dogs. With your monthly contribution, you will provide safety and consistency to your retirement. You'll provide a financial plan to be sure you're paying less to the government and secure peace of mind that you're handling your retirement and long-term investments as efficiently as possible. Call or join in the next 30 minutes and we'll send you a beautiful pile of cash and a keychain. We don't have any cash? We don't got no keychain either? Please call or go online now because apparently we didn't think about the budget for this commercial and Sarah McLachlan is making a ton of money off of us. Even though we've spent our entire budget on this commercial, we still want to help. So please, don't let your dough suffer anymore. jazzwealth.com